just at about 63,000 almost, $62,808. Has now jumped 50% since the start of the year and is nearing its all-time high, with much of that action driven by heavy interest in new spot Bitcoin ETFs. Our next guest helps run one of them. I want to bring in Bitwise Chief Investment Officer Matt Hougan. Good morning to you. When you look at what's been driving this price action on Bitcoin, Matt, how much of this is retail investors investing directly in Bitcoin? How much of it is the ETF? How much of it is institutions in the ETF?
Absolutely. It's a great question. We're seeing enormous demand for the Bitwise Bitcoin ETF and across all of these ETFs. And the answer is it's all of those categories. You're seeing retail investors come into these ETFs. You're seeing hedge funds, you're seeing RIAs or independent financial advisors. I think there's an even bigger wave coming in a few months as we start to see the major wirehouses turn on. But this has been Bitcoin's IPO moment. It's in a new era of price discovery, and I think prices could go substantially higher from here.
Let's talk about where they could go in just a minute, but I just want to go back to this idea of who you think is buying these ETFs, meaning how much of this is retail versus institutions?
Yeah, absolutely. You know, when these ETFs first launch, they're not turned on at the major wirehouses, at the major institutions. So the initial demand out of the gate for any ETF, including these, is primarily retail and independent financial advisors and hedge funds. So I think that's the primary driver. That's what we're seeing. Right. But I'll tell you, after this meeting, I'm getting on a plane to go talk to one of the largest institutional consultants in the US about this ETF. So We're going to see that next wave of institutional capital.
You did mention hedge funds, which I will put in sort of an institutional or professional category. In terms of this big move, do you think it's that money that's pushed this, or do you think it's straight retail?
Oh, I think it's both. I think it's both. It's just new demand. If you think about Bitcoin pre the ETFs, there was only a small set of investors who could buy it. Now almost everyone can buy it, and the supply-demand dynamic is just off the hook. There are 30,000 Bitcoin purchased by ETFs this week alone. Bitcoin miners have only created less than 3,000. That's what's driving the price. And it's both hedge funds and retail and that advisor community.
Obviously, you have one of these, so if you say it's going to go up, people will say you're talking your book. But if you were to say it's going to go up, where do you think it's going to go?
Absolutely.
And describe exactly why.
Yeah, sure. At the start of this year, in December, we actually published our 2024 predictions. And we said that Bitcoin would trade to new all-time highs above $80,000 a coin. Based on what we're seeing in our ETF and these other ETFs, I think we have to revise that upwards. It could be 100,000, it could be 200,000, it could be higher than that. There's simply this massive supply-demand dynamic going on, net new demand and a fixed supply, and actually a reduction in new supply coming up in April with the halvening. Sometimes investing is complex, sometimes it's easy. With Bitcoin right now, it's just about supply demand, and there's too much demand and not enough supply.
When you think about the various ETFs, spot ETFs that are out there, we're talking about a dozen right now. There's been a big question mark about whether that turns into 3 or 4, meaning there's massive consolidation, or they all remain independent, or new players emerge in the field. How do you see it?
You know, I think there'll be 6 or 7 or 8 of these that survive long term. There are 5 that are over $1 billion. We're proud that BITB is among that. We're at about $1.5 billion. So there'll be some consolidation. But make no mistake, these are the most successful ETF launches of all time by a large factor. Our ETF, which is, again, $1.5 billion, is one of the 25 fastest growing ETFs of all time. So there'll be 6 or 7, maybe 8 of these. And then there'll be variations. You'll start to see the ETF ingenuity machine come up with covered call options and other variations on the theme. But this is a big market. I think this is a $100 billion plus category. There's enough room for multiple high quality firms to play in it.